to the Ichimoku charts.com daily analysis for gold for Wednesday, October 17, 2012. Well, a change of trend today. The candle we're analysing is the second last candle here, and a change of trend to the upside. Previous day's trading, we had an inside day, we had a downtrend in place. This was prior to that, a trend to the downside, a candle that hadn't changed the trend, and prior to that we saw the market finding support at the top of this highlighted zone of support and resistance, this yellow highlight here that has been a very important area of support and resistance for the market. And today we've seen the market bounce off that level, but in a very indecisive way. A very small body candle that tested to the 1755 area of the previous support, and it's now today acted as a resistance. We saw some price rejection from that area, and that will be a very important level moving forward for the market tomorrow. If we do see the market trade up above there in a bullish manner and above 1767 level, we could see the market trading perhaps up to around the 1800 level, around number resistance around there. But with this being quite an indecisive type candle and a candle with a very small body, it doesn't really support the market testing up to that level. But by the same token, we don't have any strength from the sellers at the moment, so no indication that there is any selling coming into the market at the moment. So we will need to watch the low of the current candle for a potential lower high and higher, lower high and lower low, or a potential continuation of the trend with a higher high and a higher low. In terms of the Fibonacci extension, we're examining the current first time frame uptrend, and here we've seen the market test above the 100% level today in this indecisive manner, and we do have a target here at the 1759 level, which is the 161.8% level, coincides with exactly where the Kijun-sen is trading, and that makes that a very important area. The Kijun-sen will act as resistance, but now that we have the Fibonacci target there, 1759 will be an important level of resistance if the market does trade to there. With the Fibonacci retracement of the prior downtrend, the market has tested to the 50% level today, and we've seen this capitulation, we've seen price rejection from there, so that does suggest that there is potential for a change of trend. But as I've mentioned already, we haven't seen any selling coming in. We do need to watch the low for a potential lower high and lower low, but also if we do see the market take out the high of today's trading in a bullish manner, then we could see the market testing to the 61.8% at the 1758 level, coincides with the previous Fibonacci technique and the area where the Kijun-sen is trading at. So that sets that area up there at 1758 or 1760 as an important level of resistance. Now, in terms of Ichimoku, obviously we have a bullish market in the long-term time frame. The market has been trading above there for quite some time, but bearish in the fast-term and medium-term time frames by trading below the Kijun-sen and the Tenkan-sen, and that's quite significant. It's a little bit different than what we've seen with the equities market and some of the FX markets, where they're bullish in all three time frames. This market did test to the support zone over the previous few days, down below here, as I've mentioned, and there is strong potential for that to continue to hold, and down below that we will have the cloud come into play very strongly as the market moves forward, and the thickness of that cloud will increase, strengthening the amount of support and the dynamic range of the support below this market. As I've mentioned already, the Kijun-sen and Tenkan-sen will hold as, or has potential to hold as, very strong resistance to this market that's trading around that 1760 level. Coincides with the Fibonacci techniques, and if we do see a bullish close up above there and a test up above the 1767 level, we could see the market testing to the round number 1800 fairly quickly.